Thank you for joining our panel, Breaking Into the US. If you're a founder, if you're an investor, if you're an ecosystem builder, this is probably going to be interesting for you. We're going to share some very actionable best practices when you're thinking on taking your company from elsewhere into the US market, best practices. And with me, there's a couple of very, very interesting speakers today, panelists. Before I'm going to briefly share a little bit about myself. It's pretty uncomfortable, but I'm going to do it. So I'm Sebastián Vidal. I've been in the ecosystem, innovation ecosystem for the last 15 years, since 2010. I'm from Chile originally. I had the pleasure to run one of the biggest accelerators in the world, founded by the Chilean government called Startup Chile. I did that for 5 years, from 2010 and 2015. Then I moved to Puerto Rico, and I founded the first global technology accelerator there called Parallel 18. And we basically help support Latin American entrepreneurs get access to the US market. And now, for the last 3 years, I've been in the startup world. I run a climate technology company called Raincoat. We raised venture capital 2 years ago. We are in the US and we are in many other markets. So I have a few insights as well about how this market works. So without further ado, I'm going to introduce my colleagues here. So to introduce Ayla Matalon, I will say first of all, we have had so many deep conversations this last couple of weeks. It was very interesting to learn from her and also from the Israeli ecosystem, which I think is one of the top tech ecosystems in the world. She has been in the engineering side for the last 10 years, inside and outside Israel, included Indigo, which changed the landscape of digital printing. As an analyst in one of the Israeli first investment bodies, including M-System, which invented memory stick, super interesting. So on the US-Israel Connect, as the director of the US-Israel Science and Technology Center, part of a $30 million fund. Ecosystem player as the startup nation Israel was forming, running the MIT Enterprise Forum, lecturer on tech entrepreneurship in local international programs, currently an angel investor and a consultant, and also part of the GEN, the Global Entrepreneurship Network in Israel. Thank you for being here, Ayla. And Max Reach. Max is an associate of Mofo, who explained the law firm, well-known law firm internationally. He helps and support diverse founders from all over the world get access to US market. Before that, he was part of Republic. Probably you're familiar with the company Republic, one of the most important crowdfunding platforms, I'll say, globally, in Europe as well. So a lot of insights and interesting insights from Max as well, going to be joining from the legal side as well, structure side, investment side. I'm sure he had some amazing nuggets to share with us. Thank you, Max, for joining us.
Thank you for having me.
Super. So just to kick off, and I think this is a kind of a no-brainer, but I'm going to just say it, why founders will choose the US market, enter the US market, right, as an opportunity. I don't know, Ayla, if you wanna kick off. I think you have some super interesting graphs to show us just to start a conversation, Ayla.
Well, the American market is a huge market. Everybody speaks English, unlike Europe, where you have to, figure out different languages and different legal systems. And it's a very natural market for anybody in the world. In the case of Israel, with a population of $10 million, if you're a startup company, you have nothing to do in Israel. It's a no market. It's not interesting. In fact, the investors will tell you that you need to sing the song, "My startup lies over the ocean," right? My market lies over the ocean. There's no need to even think of the Israeli market. Now, we already have the cookbook or not? Yeah, we do. So In fact, there is no cookbook for startups. We can't give you a recipe of how to start your company, but you need to listen to what is happening in other companies to understand what to take care of and to learn from cases of success and failure. Going back to the US market, I think it's very interesting to look at this slide here. And this is the story of an interesting company called PrimeSense. Those of you who attended Jonathan Ortman's talk yesterday heard about the importance of working together across countries and across cultures. And this is an obvious win-win. Now, if we look at this, this slide is taken from a Yale University case study that was written about this very interesting collaboration between PrimeSense bringing their technology and a large company you all know, Microsoft, which had a console named Xbox, all right? So we're looking here at the three different consoles journey, starting at 2004, ending at 2014. We are seeing Nintendo, which you all know, the PlayStation, which you all know, and look at the one describing what's happening with the Xbox, all right? All of a sudden, we see a leap in the sales of the Xbox, and this is because this was the launch of the Kinect, and the Kinect was an electronic device that instead of using a handheld controller, what could you do, you remember? You could use your hands to signal to the game. Okay, so this little machine would read you, and it changed the world, all right? Now, this bleep here, when you see in the green line, is very unusual, and it's here due to the new technology, the under technology of PrimeSense. They hit a record in selling 8 million units in only 60 days. And it was the fastest growing market selling consumer good product at that point in time, generating billions of dollars to Microsoft. And this goes to support international collaboration, which is a big win-win.
Super. Max, I don't know if you have comments on why to enter the US market. It's pretty...
Yeah, happy to comment. So, despite recent trade difficulties and temporal instabilities, historically the U.S. capital markets are the strongest. But the strength of the economy is not actually why many entrepreneurs will come to the United States. It's the establishment of entities and investment setups that are tried and true and efficient. Venture capital, private equity didn't really exist before the pre-war period, right? If you were investing in something, it was a family investing in something. The Vanderbilts, the Fords, the Morgans. When did non-familial wealth turn into investing in startup companies and helping them grow? It's the post-war period, the growth of Silicon Valley, and eventually the development of the National Venture Capital Association. Through the 50s, 60s, and 70s, you see the first generation of venture capitalists syndicate money, seed it into early stage companies through standardized documents, and you have an IPO boom and a tech boom, and you have people experiencing amazing technologies for the first time. And that 80 to 40-year history, depending on how you're counting it, has created amazing precedents, both in the courts when there are disputes, but also just in the documents that people use. And so when a founder, regardless of where they're coming from, says, I want to set up shop in the United States, even though there isn't a cookie-cutter way to get here, there is a rather cookie-cutter way to set up your business that will make it easily and instantly investable. And that's just not true in any other market, even in the EU, where things are somewhat standardized but fractionalized between various countries.
Yeah, and I think adding to that point, Max, I think is an interesting one. Having worked with companies and founders from emerging markets that usually come from, the larger region is very disaggregated. So in Latin America, you have many countries, right? And each one has different regulations. In Europe, you have also different cultures that you can find. In Africa, the same thing. So I mean, the easiest way for you to think as a founder, the way that we thought in our company is like, okay, you go to the US, you have all of this. It's not easy. You need to find connections. You need to partner and everything, but it's one huge market, and it's you don't have that challenge of going from one country to another, just understanding how they work when it's very small, to get the volume of a large market like the U.S. So next, I'll want to go a little bit more practical in terms of the strategy, right? To expand into the U.S. And there's many ways that you can do that. There's a couple of interesting things that we should consider as a founders when we are looking into a U.S. market in terms of the strategy. What are the things? What are the elements that we should be looking at when we want to start working here? The market entry, the timing of that. Ayla, let's start with you.
Well, timing is always, we should always, from the very start, we should be aware, we should get to know our markets and the details of our markets. What's the market segmentation? What is its growth? How do people work? What are they using right now? And how can we become part of the general picture? We have to really master the market. We need to talk to people. We need to go to trade shows. We need to listen very carefully and to make sure that if the person we're talking to is trying to please us and give us the answers we're looking for, to make sure we don't buy this. Okay, we have to think all the time. You have to talk to people. First, talk to the less important people and build the knowledge base of yourself, and gradually go up and to talk to more and more relevant people in the organizations. You have to talk to people who can actually make decisions and sign checks within the organization. And there has to be a general strategy. And in the case of Israel, the startup nation was beginning to form in the 90s, and in the 90s nobody knew anything about Israel, and what we saw was that companies were actually convincing the market that they had great technologies, and just like PrimeSense, the keynote didn't say PrimeSense inside, right? It's not Intel, nobody knew them, but this was a great way for Israeli companies to get to their markets. Like this, it's called an OEM, original equipment manufacturer. And then you don't need to do the marketing, you don't need to do the tech support, you don't need to be there to install. You have an American partner that's doing it all for you. All you need to do is create a huge brand in the eyes of your partner, to listen to your partner, to trust them, to provide them with a real big incentive to be in place, okay? So that's the first thing you need to know about strategy when going into the United States. Of course, when you're B2B, you don't feel the market. You don't get the insights, the immediate insights. It's your partner, and this is why you have to be really well connected in order for both of you to act in a win-win manner.
Super, very interesting. Max, in your case, what are the same question, but the elements that you're seeing and the companies that have been successful from international founders entering the US, what are those elements?
Yeah, so networking is certainly key, right? Interpersonal relations and interpersonal skills are going to dictate how successful you are at convincing people to work with you, convincing people to fund you, and convincing people to basically tolerate the intricacies of moving the business or having the business be cross-border, because it is more difficult. Something that's worth considering as well is what type of advisors you surround yourself with, right? Cultural differences are certainly pervasive between founders and practitioners in various countries. I remember I did a deal with a French company once, and we became very accustomed to not hearing from their lawyers over the summer because they would go on holiday. And while that would generally lead to frustration, it was just par for the course, and we had to appreciate it and plan and understand for it. But so surrounding yourself with advisors that can help you acclimate to the culture, that can help introduce you to the right people, that can facilitate the necessary conversations, it's important. And those advisors can also be very helpful in determining how you want to actually interact with U.S. companies. In the Xbox situation, that's a license, right? You have technology that's being licensed within something else. Licenses are very intricate. They're different in every country because of various intellectual property laws, and so you need to understand the interplay. Similar with shipping things internationally with tariffs and the like.
Yeah, no, that's interesting, and that's a good segue for. I would like to dig deeper into the culture, and we had a conversation that was very interesting yesterday. Before we dig into that, I would like to share just two practical things that have happened to me as well. The first one is partnerships. So, in our company, partnerships have been a key. We are in the insurance space, but we are a technology provider. So, without partnerships with insurance and reinsurance in the U.S., probably would have been impossible just to get access to the U.S. market. So, when you're building technology for a legacy industry and that has been in the industry for decades or more, just try to generate those partnerships before, and it will be easier for you to get a soft landing in the U.S. than going solo to fight for a piece of the pie. So I think that's something that you can do fairly easy here with the conferences and fairs and all that. So that's a good one. And the other one that we use a lot is that I was talking with an entrepreneur yesterday here in the conference, and what they do is that they adapt our broken English communication channels and materials into US ready materials, which I thought it was fascinating. The thing is, in Latin America or in Europe or in Africa or in Asia, we believe that we speak English the way that the US market does, but it's not really the case, right? So we need to adapt those languages, the emails, the marketing materials, the presentations, pitch decks, all of that, right? This is this is the perfect English. I went through ChatGPT and it's perfect. Not necessarily, right? So you just double check for that message to resonate with the US market, even in the most minimal detail. So that is something that you can do in a few minutes. But it has a important impact in investors, potential clients, and partnerships as well. So with that, culture differences. I know, Ayla, we discussed yesterday about exactly the emails, but there's many other examples.
Well, a former student of mine started a machine learning company in 2005. Eventually to be acquired by Microsoft for what was published as $100 million with 0 investors, which is very unusual. In his case, he didn't relocate to the United States, which is always a question of whether founders need to relocate to the United States. The same applies to PrimeSense, which I mentioned before. However, he made sure that the company, first of all, it works the hours of the client. Okay, it's a holiday in Israel, doesn't matter, we work. If you need to be up at 3 o'clock in the morning, you're up at 3 o'clock in the morning. Each and every email going out was screened by somebody who speaks industry English, okay? I now invest in life science, and I'm invested in a company called Feel Better, which is now the CEO of which is working from Boston, and she's speaking about creating your own brand, because where does your credibility come from when you're going to a completely new place? Nobody knows the university you went to. They may not even know the names of the companies that you work for. You don't have anybody around you. And the thing that they did to create the credibility of the company is they carried out research that supports what they're going to do, what they're doing and what they're going to do. And what they're doing in fact, is that they are alerting the medical insurer about cases in which they're insured, their patients might be subject to be hospitalized. And they're telling them in advance, make sure you check the condition of this patient to make sure you don't need to spend money on hospitalization, right? Another great example of a company, I don't know how many of you know Checkpoint. Checkpoint was the first big cyber company founded in 1993. And Gil Schwed had to make it up himself because there was no tradition for very few Israelis were working internationally. And the very delicate, dialogue between Israelis and Americans. Israelis typically doing R&D and the Americans typically doing market development and sales, which are always, it's an existing conflict as is, but if you add the cultural difference, it can be hazardous. And what Gil Schwed decided to do is once every quarter, they hold a whole week in which the senior managers from all over the world get together. We're talking about 12 to 15 these days. And again, the personal touch is so important. And also providing the newcomers, okay, the people who are not part of the founding team, providing them with a huge amount of responsibility, and they listen to them and they take their advice. It's not that they pretend to be partners, but they're real partners and they appreciate what they're getting. And again, when you're partnering in the early stages, take into account that you're providing, your partner is taking a huge risk because they don't know whether you're going to be successful or not, and you need to be generous in the percentages that you give your partner, and with time, you'll feel more confident to change the terms. One more thing about the language. One of the Israeli founders I know, he created a dictionary together with friends in order to understand the messages when you're talking to an American company. The most known example is that you go to a company, you want to sell something to them, and they tell you, well, this is very interesting. And the Israeli founder goes home and says, oh my God, they love my product. But in fact, this is a way of saying, look, this is not for us. Go home, all right? Thanks.
I would add that the cultural issue manifests even more when potentially acquiring a foreign business or having a foreign business acquire a U.S. business. On a number of international M&A deals, one of the most important diligence items is not looking through the balance sheet or looking through the material contracts. It's the senior management teams who will be working together under one roof, going out for a drink, going to a soccer or football game, doing something social, and realizing either, I could see myself working long hours with this person, or I want to rip this person's head off. This is not going to work out very well. And, not a scientific fact, not data-driven, but historically, when there isn't a connection between those management teams, when there's animosity during the partnership agreement or animosity during the diligence for the M&A, it's usually a less productive and less fruitful experience at the end. And you will see valuable senior management leave one side or the other because they can't get together, or you'll see the partnership deteriorate due to mistrust or a lack of communication. So, interpersonal diligence at any level is almost more important than ticking and tying numbers or, confirming the validity of documents.
That's actually a great point. I think I've seen also companies, and we ourselves are based. We have employees in Latin America, in Europe, and US as well. I have seen many times it's like, I have my team in whatever, South America, and my tech team there, and I'm gonna, because it's cheaper, and I'm gonna get, I'm gonna arbitrage in the US, and I'm gonna hire my people there and just sell in the US or whatever. It's like that doesn't work. Doesn't really work that way, and I always, suggest, and we have done it as well, to hire at least sales and marketing. If you're targeting the US, because they know a little bit more, they know how to navigate those waters way better. And I think the ROI of hiring a senior business development person in the US is way higher than just having to spend a lot of months just training that foreign person into the US. So I think that is something to consider. It's not all arbitrage. Here is cheaper, then I sell more expensive, and so that is something to have in mind when you're considering the cultural differences, and if you're thinking on opening the market. So I think now it's I think I'm gonna leave the fundraising part to the end, but the relocating part I think is practical. I think Max, you can lay a little bit of the ideas behind what is the structure that you need when you are relocating to the US from an entity, but also from an individual part of it. So
Yeah, it's a great question, and not legal advice. Consult your own advisors, consult your own tax advisors, but the general risks are, if you're going to move the business to the United States, how do you do two things? How do you do so with tax efficiency, right? You don't want your existing investors, your existing backers to have a taxable event just because you've moved the business, even if it's not an exit for them, right? You're just redomesticating, but you need to make sure that they're not going to wind up owing money as if the business had exited. And it's how do you ensure that those people and the intellectual property and the assets that you've acquired are properly owned and situated by a U.S. entity. And that U.S. entity type, 9 times out of 10, is going to be a corporation. It's a legal fiction. It's a person, for speech purposes, but it is a type of entity that allows the stockholders to have a vested interest, but no liability for the actions of the entity. The stockholders elect directors, that's your board. The board appoints officers, the officers run the business. Traditionally, when an international business moves over, your founders will be the majority stockholders. And those founders who are the majority stockholders will also be the board members, maybe with a few other people. And then they will either appoint locally based officers or themselves be the officers that run the business. But this is the setup that investors of both, domestic and international flavor will expect to invest in the United States. And this is a tried and true system where there's robust documentation that's available. Most corporations are incorporated in a state called Delaware. They have a somewhat, monopoly on legal entities in the United States because they have a very robust court system. So if there are disputes, there are specialists who can deal with the disputes. And they have a legislature that is very focused on innovating and passing rules to allow these entities to be modern and do things quickly and do things efficiently. And so you see this manifest in things like recent lawsuits involving Elon Musk. He was in a protracted lawsuit over his payment for 10 years. The state of Delaware said, we're going to come out with new rules to avoid these lawsuits because we think that they waste time and money. And so we want to find a way to better deal with these things, which is very attractive if you're a prospective investor to know that there's a court system that, if you have a dispute, is going to be efficient and thoughtful and adjudicate things quickly. But back to moving the assets over the border. There isn't a one-size-fits-all because wherever you're coming from is going to largely dictate how you're going to get here. Some countries have exit taxes. Some countries make you basically file for permits to move a business outside of the country. Others don't care as much. There are corporate flips where you create a new entity in the United States, and all of your owners of the foreign entity become owners of the U.S. entity, and suddenly your local company becomes a subsidiary. There are asset sales. There are licensing agreements. You'll have to work with your personal advisors. But ultimately, the goal is for the capital of the business to be in the United States, the stockholders of your company or the people who have an interest in your company to own it via a United States entity, and for that entity to effectively control the business, even if it's still primarily operating in your home country or in the other countries that you've expanded into to date.
Okay, yeah, I took some notes as well. Ayla, you have some comments?
Yeah, I'll move to the next slide. And the question is whether, I mentioned that, the question whether one of the founders needs to relocate to the United States is a huge, huge question for founders for a bunch of reasons, which you would probably all understand. This is a very interesting result of research carried out by Professor Ilya Strebanov of Stanford. And it's showing the Israeli-founded unicorns. Now, a unicorn is a company that is still privately owned, and whose valuation is $1 billion or more. And you'll see that the number of Israeli unicorns in the United States is 29, and any other country would be less than 10. So, of course, this is a very interesting phenomena. And if you look at the next line, the one under the big line, you'll see that the percentage of companies that did relocate to the United States is very large, okay? Most of them did have to relocate into the United States. Having said that, I have to tell you that I know many, many fantastic companies. I mentioned PrimeSense and Equivio and Checkpoint, but also Teva, which at some time was the largest generic pharmaceutical company worldwide. It was working from Israel, and many, many more. So it's not always the case, and it really depends on the character of the leadership, and they find ways to work around it. So in the case of PrimeSense, he was spending 2 weeks in every month in the United States, helping things move forward. This is a topic in its own, and if you'd like, I'd be happy to elaborate on that personally later on. The one huge, largest obstacle in starting business in the United States, as Sebastian already mentioned, is the hiring of the right people in the United States. And this, again, due to the cultural gap, it's a very hard hire. And if you go to a hiring agency, they would ask for $150,000 to get you a CEO, and it's very important to learn everything you can about this. In any case, if you are hiring the wrong person, the thing you have to do immediately is fire them. Okay? Don't maintain the mistake inside your company. You'll have a growing disaster within. You did the wrong thing. Fire. And I know a company who hired a high-level person. Within a week, it was apparent that they won't get along with the R&D team, and they had to fire them within 1 week.
I will just interject and say that's the best advice I've heard of anything said on the stage today. It's very true.
We have like 10 minutes. Can I get a show of hands of who has a legal entity in the U.S. as it stands? Wow. Less than 10%. Okay, so what I will say is this. It all depends on the vision that you have. If you're a founder outside the United States, if you're going to raise capital and you think that you're going to raise multiple series and you want to become these large billion-dollar companies and more, I will suggest before even raising money locally, right? If you're just, let's say you're a founder from Colombia and want to raise funds and you have some interest from local investors, before you even do that from a local entity, just build your Delaware C Corp and just consolidate all the investors into that entity, and then create a subsidiary in your own country or create a subsidiary in another state within the United States. But just, it's going to be so much pain if you don't do it early on. If you create a limited company or a LLC in your own country, you raise some capital there, and then you want to create a Delaware, a C Corp in the United States, and transferring all of that, it's going to be more time consuming and also more expensive. So if you think that you're going to be big and you're going to raise capital and you're going to follow that path, just do it instantly. One quick thing that it's very practical, and most founders some founders don't know, is like you can create an entity from your home country in the US. You can open a bank account from your home country in the US if you create a company. So as soon as you create a US entity, you will get a number. So you are someone in the US, just not an individual, but you're someone. And with that number, you can open a bank account, right? Usually Mercury is not sponsoring, but Mercury is the one that everyone goes to. And with an entity and a Mercury account, then you can have clients without even being here, right? So you don't need to relocate if you're building something like a software company or something like that, right? What the U.S. government at the end of the day wants is for you to generate wealth into the U.S., right? So it doesn't mean if you can move here just fine, but if you hire people here and do business, well, that's even better, right? On relocating practical stuff in terms of the visas, you have many options, but following the same logic. If you have an entity and then you have a bank account and you start doing business here, your own entity can hire you and you can apply for a visa here in the U.S., right? And there's many options. I have gone through 3 different ones. Now I have a green card, like happy, but we can definitely chat about that later on. I don't think we're gonna have. Yeah, maybe we have like a couple of minutes for fundraising. Quick comments and notes of fundraising tips in the US if you're an international founder. Who wants to start? Ayla? Go ahead.
A short advice, when you go to a VC, most angels don't invest across borders, okay? It's beginning to happen, but it's pretty rare. If you're going to a VC, wherever it is in your own home country or in the United States, on top of deciding whether this is VC is going to, it's a mutual decision, right? Invest in you. It's also very important to know who is the partner within the VC that will be sitting on your board. And it's a question you should ask before the investment takes place, right? You want to have somebody that you like, you get along with. I mean, relationships are everything.
My advice in this respect is to KISS. Keep it simple, stupid. So frequently founders will come with odd investment terms, bespoke instruments, ideas that may make sense to them, but will seem foreign, no pun intended, to anyone who will hear it. At an early stage, you want to be raising either with a convertible note or a simple agreement for future equity, which is a SAFE. You don't want to be pricing your stock. You don't want to be creating series of preferred stock at that early stage. You don't want to be offering coupons or bonds or odd interest rates. All of these things will be red flags to potential investors who are going to be accustomed to early stage investments taking the form of very, very simple 3 to 7 page documents. So follow the tried and true path. Look at Y Combinator's templates. Look at how the various accelerators in the United States seed their own companies and use that as the basis for how you try to get the initial funding in the United States. The more complicated you make it for yourself, the less likely it is that people will be willing to invest in you at those terms at that time.
Awesome. On the business side, I think something that we have done is, when you're targeting U.S. investor, you need to have a vision that is grandiose. It's very ambitious. Sometimes if you come from elsewhere, you have, you want to nail a specific market. You have some early traction, and you focus on that early traction and how that early traction is going to grow 2 times, 3 times, maybe in the next couple of years. U.S. investor is like, okay, that's fine, but what do you want to achieve, right, with this? Like, how this is going to make a $10 billion company? What's the $1 trillion market now? Those are the conversations that they want to be in. How are you going to be the category leader? How are you going to? So those are the most interesting part of the business. The traction, even though it could be interesting, if the more you share, the more they will ask questions, and you're going to lose momentum on the most interesting part, which is the vision side of it, right? So that is something that we experienced in the US, and it worked really well for us. We raised pre-revenue and millions of dollars, and that because we focus on the vision more than anything. Team, all of that is important as well. We have, I think, 1 more minute for questions, no?
Hello. First of all, thank you so much. It was a great session. So one of the main questions I had, so I'm an international founder. I just came to the US a year ago as a student and just incorporated with my company. And my question is that how can we, especially in when we want to raise funds, like it's hard to gain the trust of especially American investors as international individuals because like especially with the state we are, like a lot of like deportations happening, those kind of stuff. Like, so how can we perceive to gain the trust of the investors? How can we try to convince them that they can invest in us, trust us, and therefore get their money back in the future, and we're not gonna just run away with their money?
What last year I founded an activity that strengthens startup companies in Israel who are hungry for funding. Okay, and what I did was I created something that diminishes the marketing risk, because it's, at least in the case of Israel, the technology risk doesn't really exist. I'm not talking about biotech companies, but other domains. But when the investor has to trust the company that they will succeed with the market. And what we are doing is we are connecting Israeli startups with the potential companies in the United States in order to create either the, purchases or strong connections for distribution. And I think this is one way. If you can get, proof of customers expressing a real need in what you have to offer, it will make the investor more comfortable.
So, what's are you from Brazil? From Brazil? Sí. Where are you from? From
Iran.
And
Great.
what vertical are you? Education? Yeah. So what I will do if I were you, and this is something we did as well, is like first go to find entrepreneurs from Iran that have raised capital in the US in ed tech. So get in touch with them, share your company, see if you can find advice, guidance, and mentorship from them. But also, if they like what you're doing and you as a founder, it's very likely for them to introduce to their investors. And the best recommendation for an investor is from their portfolio companies. That's where initially the first checks comes from. So, and it eliminates a lot of the barriers of the international myths, right? So, yeah.
Yeah, I would just say interpersonal skills, the better your network, the more likely you are to be able to find someone to trust you. If you can find someone who has already trusted someone else and that person introduces you, recommends you, that's your best bet.
Yeah, and also, investors invest in lines, not in dots, right? So they're going to meet you now, and they probably think that there is potential there, but you are the one that need to follow up for a few months just to gain that trust. If they don't have it, it's not like in the movies that you're gonna sit down. It's like, I love it, I'm gonna write a check. It takes time, and you need to build those relationships with time and build trust. And trust is built with execution. So if someone asks you, hey, I would love to see that data, and you don't send it in a week, forget it. It's not gonna happen. You need to do it in the same day. Things like that, no?
And this brings us back to, we're done?
We have the...
Thank you, everybody. Thanks for being here.
Thank you.